Hello and a very warm welcome to everybody. I am Shrija Agrawal and you are watching another episode of Mint Startup Diaries. Today's episode is really a deep dive on FinTech, not really a discussion on FinTech at a superficial level, but we're going to discuss really the niches developing within FinTech. Before we get down into this deep dive discussion with a very meaningful panel, let's do some context setting on the same. Why FinTech? It's really been a record year for FinTech funding. Mega rounds, unicorns, M&A exits, and more. FinTech is one of the fastest growing areas in global business in 2022. Its emergence has profoundly impacted how businesses are operated, how transactions are facilitated, and how the future of finance is being shaped. The COVID-19 pandemic has majorly transformed the face of finance, with technologies being induced to evolve much faster than they would have. Innovation and technological progress are thought to be the linchpins of the evolution of FinTech, and they will continue to derive disruptive business models in financial services. With FinTech itself once being a niche in the world of finance, it's intriguing how it's becoming so mainstream that FinTech itself has its own niches. Now, these niches in the form of critical trends and technologies are becoming integrated and intertwined to provide an impetus to innovation in the financial industry. We are witnessing how these niches are becoming adroit at harnessing technological creativity to generate value and mold our competitive landscape. Think about the way FinTech has changed the way we think about money and how we shop. You already have various financial services in the FinTech space offering credit cards or personal loans, but they all require much more effort and consideration than easily clicking a buy now, pay later provider at the checkout. In this way, BNPL seems to be an excellent example of product meets consumer needs. So a maintained decade-old relationship with traditional institutions and big banks are now embracing the idea of an open bank movement. The emergence of fully digitized banks, known as neobanks or challenger banks, are the new niche banking options which are in direct competition with various legacy institutions. Now, those consumers who are digitally savvy wish to cut the red tape and deal with more flexibility and go for this option. And that is why neobanks are carving out a niche in banking, gaining an extra edge since they're characterized by high speed, useful services, and customer-friendly support staff. We are also seeing the seamless integration of financial services into traditionally non-financial platform in the form of embedded finance. Customers are enabled to access financial services within the app, which enables enterprises in the MSME, B2C, and B2B segments to increase their customer lifetime value, monetize their customer base, and vertically scale their product offering. Allowing for customer-facing digital platforms to embed financial services into themselves is carving out a niche of its own. Globally, FinTech is projected to reach a market value of $305 billion by 2025, according to market data forecast. Now, that growth would be fueled by rapid consumer adoption and by enterprises turning to FinTech for banking, payments, financial management, financing, and insurance. But are these niches fully exploited? To break it all down, please help me welcome Vijay Rajgopal, Head of Sales and Business Development at Amazon Pay, Madhur Shalini Iyer, Partner at Rocket Ship, Shreya Suri, Partner at Indus Law, and Nish Kotecha, Chief Mentor Agam FinTech and co-founder of FinTech. Taking it further from my introductory remarks, that what really we are seeing is the unbundling of finance, so to speak. Earlier, perhaps finance was seeing that one big whole. And I think 2022, or let's say like 2015 onwards, what we're seeing really is the unbundling of finance. Now, my question really is that what makes this unbundling of finance such a compelling opportunity for this decade? I can sort of begin with you, Vijay, and then get on to others. Yes.
Sure. Thanks for this discussion, and I think a pleasure to get onto this with all of you. I think that's a great question, Shija. I think unbundling really has been what we have seen over the last few years, and it's fundamentally fueled by what the customer need has been, right? Like, so the idea is to bring everything to the consumer, in one shot, in one place, when he or she needs it, at the time he or she needs it. Like that's really what's driven, this unbundling of fintech. And let's say if you were to just break it down into various segments, right? So if you broadly see, fintech, what does it constitute? Right? You can take the example of, say, a payments firm, or you take, lending firms, or you take insurance tech firms, right? Or you take neobanks. So at the core, what you're trying to do is to get to the consumer with the product and make it extremely convenient for the consumer to use the product, right, at that particular time, right? So so earlier, what used to be the in some sense, the ambit of banks, right, where consumers, even if you take a decade back, right, the concept of going to a branch wasn't that alien, right? I mean, it's only that in recent times, and the people realize that, okay, hey, if I can get a delivery at home, right, if I can place an order and have something delivered at home, why can't my banking be as seamless as a Swiggy order, right? Why can't my investing experience be as seamless as an Amazon delivery coming to my doorstep? Those are the kind of consumer preferences which have driven this unbundling, right? Like there has been an increased need for better and better service, driven by convenience, to some extent even driven by rewards, I would say, right? Because some of these habit changes initially start with a reward driven habits, and then those habits stick. Like if we all were to go back, let's say even a decade back to when Ola or Uber started, initially it was a habit change, right? And the habit change was driven by rewards like cashbacks, etc. But over a period of time, those rewards went off and the habit stayed. You can apply the same analogy to to fintech, right? Because initially, when you, the first time, if you remember, when you scanned and paid a QR, you would have felt that, oh, it is such an alien experience, like how does this even work? But after a point of time, now everyone fishes out their phone and like, okay, hey, where's the QR, right? Like, I mean, it's stuff like that, which really marks what I would say the classic unbundling of what fintech is. And maybe I'll pause there.
Thanks for that, Vijay. Nish, I also would like to bring you in here. So according to Vijay, it's really been the consumer preference and the consumer experience at the heart of what's driving the unbundling of finance. What would your viewpoint be that why is unbundling of finance such a compelling opportunity for this decade?
Well, I concur with those comments, but let's think a little wider. Let's take a wider lens, right? The old traditional banking model was built around a branch. Okay, and that branch over time has become very expensive to run, very risky, and operates at a time frame, Monday 9 to 6 o'clock or 9 to 5 o'clock, when people are also working. Right now, we have that new branch, which is in our pocket, and you refer to it, which is that smartphone. So that smartphone has delivered an ability for banking providers, fintechs, and others to put services on that smartphone and jump not only the consumer ease at which they can bank, but also bring on board those consumers that have never been involved in banking, those consumers that have never been able to walk into a branch. And you know what group I'm referring to, the middle and the lower elements of our pyramid. And that drives growth. But more importantly, that also has driven a huge new asset class. So the creation of models such as buy now, pay later, embedded finance, not only need to look towards the top of the pyramid, but look at the middle and the bottom of the pyramid to a new consumer class that they are enabling with that smartphone. You've also got to think about technologies that are enabling that delivery of service, cloud, blockchain, and that smartphone. Bringing that entire stack together means data can be collected, data can be validated, and data can be run, services can be run efficiently using this new type of ecosystem. So for the first time, we're taking banking out of a branch and putting it in the hands of the consumer.
Banking out of the branch and putting in the hands of the consumer. Madhu, I would like to bring you in this entire narrative of unbundling of finance and it becoming such a compelling opportunity. Both your sort of fellow participants said that the one was consumer at the heart of it, which I sort of alluded to that. And for Nish, it's really about taking the banking out of the branch and really getting in the hands of the consumer as and when they need it on the go. What really is your viewpoint on why we are seeing what really are the driving factors for unbundling of finance?
I think India is really sort of come to, as we in Rocketship, I'm sitting here in the Bay Area in the Valley. And our screens really started popping up very early. And so we are a data-driven investor. And our deal flow essentially comes from our algorithms that we mine on the largest startup database. We want to turn VC investing on its head and not just invest in invest in the Valley, but we want to look beyond. And as we were looking beyond, what happened in 2015-16 was that we started seeing a spate of companies in India. Which was just sort of really, really paralyzing to us. We were thinking we want to sit here and invest in the Valley, but we started seeing companies in India, and it all sort of had a very, very high correlation with Jio and Jio launching its broadband services. And this blip that we saw, we thought it was a blip, but it was really something fantastic and fascinating going on in India. And we called some of the local investors, and they were sort of scratching their head. And we've just sort of seen more and more of it, and we are not surprised at all. And we were very lucky to have leaned in very early. And I think that's more of the same in many sectors. We saw it in e-commerce, we saw it in B2B, but we saw it in a lot of things. But FinTech is truly amazing, and and I personally am interested in FinTech. But digital penetration is at the heart of it. Tier 1 cities saw it, and now I think Tier 2 and Tier 3 cities in India are seeing it too. And when you say unbundling, here is a class of people in Tier 1 and Tier 2 and Tier 3, and really sort of dovetailing Janish's and Vijay's point of view. Here are consumers that are in different kinds of cities in India, in different pyramids of society that require, that have digital access now. And want to do things differently. And the pandemic really, really accelerated that process, because now, you had a bunch of people who were very new to online shopping and experiences and sort of wanting to do things, differently. And you have a whole host of services. It's not just neo-banking, where you're giving experiences to consumers, but it's also sort of wealth management. People want to invest in different asset classes. JAR is a classic example in our portfolio company that's trying to make, investing sort of easy for all branches. And so, anyway, this is, it's really happening, in a very, in a very accelerated pace because of the pandemic as well.
Yeah, so definitely the COVID-19 pandemic has accelerated digital transformation across all boards, not necessarily only FinTech, but the way people have adopted digitally, because at a time when touch is taboo, you are left with no other option. It's all digital. Digital technologies are telling us when to eat, how to pleasure, what to shop, when to work. Everything fundamentally has changed. But on this entire premise and question of FinTech and bundling of finance, but really what I'm gathering is consumer experience, technological innovation, and like Madhu also alluded to the fact that Jio movement in India, and I think it's an important milestone to what really happened in India's growth story. One definitely was demonetization, another was Jio really coming up and really penetrating the smartphone into tier 2, tier 3 with very low cost Jio formula. So that definitely can go as one of the landmark moments for the Indian FinTech movement, so to speak, or perhaps the Indian digital revolution, so to speak, because Jio has enabled a lot of media companies, OTT platforms, a lot of it on its layer. But keeping that aside and taking the conversation strictly on FinTech, Nish also spoke about buy now, pay later. So let's also spend some time on BNPL, really emerging as a very powerful niche across all the investors in India. We talk about the fact so many FinTech companies, they all are positioning themselves as a very significant player in BNPL. But to me, the problem really with BNPL is that it's a great marketing strategy for the entire credit card phenomenon, really. I mean, what really is buy now, pay later? It's a great marketing strategist who thought about it, that's all the characteristics of a credit card, and let's give it a name, buy now, pay later. Am I missing something larger? Or is it really just another great marketing strategy in the VC world? I'd like to get onto you, Nish, and then on to you, Vijay. What do you really think about the buy now, pay later phenomenon, if one were to look at it really critically? Yeah.
I think your point is not wrong, but let me take it another view. has a credit card model been around for too long? Right? Has the credit card model itself needed disruption? You know, particularly as we start to build, and this happens all the time in tech, oligopolies, right? The credit card providers have started to own the consumer experience, and they themselves disintermediated the banking payment system, right? By putting it into the hands of a consumer. This card is in effect buy now, pay later. And when buy now, pay later providers have come along, they themselves are at risk of disintermediation. The difference with buy now, pay later is how they assess credit, right? You have the models that basically look at giving you your initial credit, and if you repay, you have the opportunity to take more and buy more in the future. If you don't repay, they see that as a customer acquisition cost. You have others who are looking, including one of the businesses, Agam, I'm involved in, who are looking at providing an instant credit score. Credit card companies were credit scorers. You know, there was an aspiration if you were able to receive a credit card or not. Buy now, pay later has done away with that and taken a different view on how to acquire a customer, and thereby enabling certainly those middle and lower class customers that were never involved in the credit card boom.
Yeah, I think great points, Nish. I'll probably just add on to some of the things which Nish said, which are absolutely valid, right? So credit card industry for sure needed a disruption. And I think one of the fundamental things that they worked with was that, you know, a person is either eligible or not eligible for a credit card, you know, based on a bunch of parameters. BNPL kind of turned that on its head, saying that, okay, instead of looking at a person, you know, can I look at transaction level economics, right? You know, can I look at merchant level economics, right? Can I progressively evaluate this customer to kind of discern the credit worthiness, right? Those are the things, you know, which BNPL brought, right? And if you take the example of the real success stories across the world, right? Whether it's Affirm, Afterpay, Klarna, time and again, you know, they've proved that, you know, there is, see, at the end of the day, you know, there is value. And at the end of the day, without customer value, no proposition can really succeed to this magnitude, right? So if you were to think about it, by layering on top of the merchant provider, right? Let's say at the point of sale, right? Or at the time a transaction is getting completed, right? At the time of checkout. And by integrating with the merchant and getting characteristics of the transaction, you're able to provide the value at the time of the transaction. And for the customer, it is value, right? So today, like, you know, if given a choice between paying 10 bills and waiting for OTPs and settling it, if someone tells me that, okay, hey, end of the month, just pay one bill, right? It is value, right? Or if someone, let's say, you know, there is a college student, take the example of, you know, entities like Slice, which are providing this, who, you know, he's like, you know, scampering to kind of gift his friend you know, a certain item, but he doesn't have the funds. But you know, there is an offering which says that, hey, okay, you take this gift card now, but you split it into 3 and then you pay it in 3 months, right? So his need is satisfied, right? And the need is satisfied through the intelligent use of technology, through the intelligent use of, you know, layering at the time of transaction, through the intelligent use of merchant partnerships, right? And those are 3 things, you know, which have really made, you know, BNPL work. And to your point, Shrija, yes, is it in some sense a credit card substitute? It is, but maybe it is an intelligent substitute, right? And even if it doesn't go the whole hog in terms of giving the person a credit card, which, like Nish said, is aspirational, it satisfies a certain set of needs which are important for the customer, right? So to me, the customer centricity is still very important here.
Great. So sort of very well said and sort of laid out that customer centricity is really at the heart of BNPL, and also to the Nish point that perhaps it is beyond what credit card did, and that industry itself needed disruption. But my question remains to both of you also, that how is one BNPL company then different from the other? When we speak to entrepreneurs, they all say the same thing. What you sort of point out, we have great technology, we have great people, we have great merchant partnerships, and they're all also heavily funded. So from a distance, what really is the competitive advantage or the moat of one BNPL company versus the other? Or are you telling me that, Shrija, the opportunity is just so huge that there could be 10, 15 BNPL companies in the country? But we're already seeing so many fintech unicorns in India really positioning themselves as the go-to BNPL destination. Yes, Vijay and Nish, and then I'll get on to you. Yes.
Yeah, Shrija. So the opportunity clearly is massive, right? Because the use cases are massive. Today, in my mind, we have just started touching the tip of the iceberg in terms of for what you can use a BNPL. But think of it, all your needs, eventually you can transform it to a pay later, and that's really what all these companies are chasing, right? Like just the sheer number of use cases. That is one. Second, the set of customers who are slowly becoming eligible for a BNPL, that base is increasing. Right? It started off as a small base, and that base has been consistently increasing. Right? That's the second. Third, the spectrum of your partnerships with merchants, and by merchants I mean both online and offline merchants. Right? Like, so I mean, to give you a classic example, India's not many people think of it like that, but India's classic BNPL player is Bajaj Finserv, right? Like, I mean, like, they established the offline BNPL play way ahead of anybody else, right? Like today, people are more familiar with the online versions like Zest and Simple and LazyPay, etc. But this play is common for both offline and online, right? Like offline in terms of when you shop at a outlet, online when you finish a transaction online. In both these, there are opportunities, right? So the opportunity set is large. And to your question, Shrija, what is going to differentiate, right? Like what is going to differentiate is your ability to evaluate the customer, right? Is the ability to know when to pre-approve a customer, for a BNPL, right? When to which customer, should I give this BNPL to, right? And that is going to differentiate, because like if you don't get that right, you're going to have a fairly large NPS soon, and that's going to stare at you in your face, and things are going to go down. And but that is fundamental, for your growth, right? At the end of the day, let's not forget, BNPL is still a lending business, right? Like, and any lending business worth its salt, if you don't get the credit underscoring algorithms right, and your models right in terms of how to evaluate and assess, that is one of your mode. The other mode is how you go about acquiring customers and what value are you able to provide them through partnering on multiple use cases. So which means the extent of your merchant network, the quality of your integration, the seamlessness of your experience, right? So today, even there are significant differences between one BNPL player and the other BNPL player. Even though the offering might be the same, the customer experience is very different, right? Like so the seamlessness, the convenience, all those are also differentiating points, right? So if I were to sum up, Shrija, the quality of your your credit scoring mechanisms, right, the seamlessness of your customer experience, and the quality of your merchant partnerships. These are three strong ways by which a BNPL player can differentiate one against the another.
I think the one thing
that's a very meaningful insight. Yes.
The one thing that I will add on is that the sheer scale of this is what is not going to be sort of it's not a blip anymore. We are at about 3 to 3.5 billion in terms of a market right now, and that's estimated to go up to about 50 billion in 2026. To put that in perspective of the users, and I'm just talking India right now, and I'm just kind of, it's the top of my head numbers. About 10 million users today. It's to go up to 100 million users. To Niche and Vijay's point, it's about sort of penetrating to a wide variety of use cases, to a much, much wider scale of customers. 100 million users in 4 years is just, it's massive, it's mammoth. And that's the beauty of India. And that's the beauty of the scale at which this is going to play out. And that's the beauty of, sort of giving credit to not credit-worthy customers at the moment. And that, I think, to again sort of dovetail to Vijay's point, it's about how do you sort of have these underlying scores, credit scores assigned to these customers, and what are the use cases that you solve. But the scale is super massive, and I don't think that it's I don't think it's just a few players here. I think the market is large enough to cater to a lot of players.
Nish, I would also like to bring you in to sort of Pandhu's point, also what you said. So definitely the market opportunity is huge, and that is going across a lot of sectors in India right now, just where we are in our digital transformation journey and the way we are in digital adoption journey, so to speak. But also dwelling further on the operational aspects to what Vijay highlighted, that if I were to compare one BL company versus the other, what can make one tick? What can actually make one the number one and the other the number two? What really could those competitive advantages or moats be? Yeah. He highlighted 3 of them. According to you, to all our listeners watching it, what could the other areas really be?
Well, it's not. I agree completely with the comments that have been made, but I don't see the market as being number one or having a dominant player. In fact, I'd be rather disappointed if that's where we ended up. The opportunity here is to take, to a point earlier made, non-credit worthy. Actually, these customers were never non-credit worthy. They were just credit worthy, and we weren't able to assess them for credit in the formal banking and the formal finance network. And BNPL innovation has starting to bring those customers, allow them to receive credit for smaller transaction lots, right? And one of the differentiating factors, in my view, will be BNPLs who focus on an average basket size. You know, do you go as low as BNPL for food delivery? You know, you can see pros and cons to that model, right? When you're pushing credit into consumer requirements on a daily basis, or is it BNPL for a larger, basket size, maybe gifting during festival times and so on? I think BNPLs will start to differentiate themselves by transaction size as well as by customer type, right? And I think that's a good thing, because really where I'm heading is the idea that actually a consumer should be able to provide a competing element, should be able to choose BNPL providers at the point of transaction. Now, that may seem a little bit futuristic, but I think we're getting very, very close with the speed of the service that we have on our smartphones at the point of transaction, the ability of these technologies to offer you a view as to who's providing you the best service. Ultimately, does best service translate into best price? And that's where I think we will end up. And it'll be good if a consumer can say, well, you know what, I quite like that one because they've given me loans before and they've been very good and I've been happy with the service and I'm happy to pay a little bit more. Or this one is the one that is most cost competitive. Do we ultimately go back to what happens all the time in India? And I'm congratulating India in that approach, which is competing on price.
Great.
So one other thing actually I'd like to add to what Nish just mentioned. Another distinguishing factor which I feel will be relevant for BNPLs in the future is the collection partners that they use and how user-friendly that service is and how efficient that service is. So that is something which, the RBI tends to focus on indirectly at the moment, but that is a regulatory aspect they are looking to analyze and cover in the future. But yeah, that is relevant for any NBFCs which are partnering with FinTech companies at this point in time on how the recovery happens.
Great. Thanks for that also, Shreya. A very meaningful discussion and such meaningful insights sort of from an operational point of view also coming in the fore. And that's really, I wanted to be the focus of this discussion, nuggets of wisdom and minute points coming to the fore. On BNPL, I think a lot of time has been spent taking the conversation really forward. Credit card. And Vijay, you made this point that if you don't really have these 3 or 4 things right, perhaps you could be saddled with NPAs, and you don't really want that to be happening. So what really are the pitfalls which can be avoided by the fintechs and the lessons that they can learn, which the traditional credit card industry really had in terms of NPAs or perhaps giving credit to the wrong people in the pursuit of making creditworthiness as in made? Because if you're a democratized creditworthiness, you can also have this, that you're perhaps giving credit to people who don't necessarily have the willpower or the paying capacity, right? And you settle with NPAs. And then when you have the VC money, who are perhaps overawed with the opportunity, there could be temptations to put you on a pedestal, to grow as much, to really give out money to as many people. So how do you really maintain that balance, that you're not saddled with NPAs? So one quick point on that, and then we should talk a little about embedded finance also. Yes. Got it.
Yeah. No, that's a great question, Shrija, in terms of, how do we really do this balancing act of, growth with quality, right? That's essentially the crux of the question, and that in some sense, has been at the forefront of all firms, which are forayed into lending, right? Especially, fintechs which are forayed into lending. And one should remember, right? Lending is not only B2C, it's also B2B, right? There is enough and more SME and MSME lending, also, happening in the country today and through fintechs. So I think, the core of the question, comes down to really, the fact that, one, how do I get my, algorithms, mining, insights and analytics right? That is an evolving game. Like, do I, trade off a certain amount of growth for a level of conservativeness in terms of, how I build my book, right? And if, and you can clearly see it, fintechs, who are in there for the long term, there is a certain measuredness in terms of, how you build your book, right? You're not chasing growth just for the sake of it and, going into all kinds of partnerships and then having to pull back, etc. Right? So you're fairly measured. So which means that, let's say, even you sign up with a partner, your channel partner who gives you access to customers, you're clearly seeing, what's the quality of the funnel that's coming in, right? What's the behavior patterns of these customers? What are the different cohorts that I can cut these customer groups into? And how do I vary my, lending, to various cohorts, right? How do I incrementally add on more ticket sizes to some of these cohorts? So these are intelligences, that need to be built in, that need to be mined. So at the core is, very, very strong credit risk mechanisms that need to be there. There's absolutely no going away from that. You need that, to be really rock solid in terms of the foundations that you're building, right? The other thing, that I would, kind of layer on is, in some sense, right? I mean, you chase, what is getting, rewarded, right? And in some sense, I think that's a larger point for the ecosystem that, the rewards are in some sense, even funding, etc., has to be a balance of, growth and the right amount of credit quality, right? Because, and that's where I think the investor community has a huge role to play. And I'm sure, Madhu would affirm that, when you're kind of really evaluating fintechs, what are you kind of, putting them on the pedestal for? I think, that's a great way by which, you can really, nudge behavior, right, in terms of, going in the right direction, right? So these are, fundamental to me in terms of, how you go about it. So one is, your credit scoring mechanism. Second is, incrementally adding more channel partners. Third is, the depth of your analysis in terms of, how you go about lending. And fourth, in terms of how the ecosystem is rewarding you, right? And all these four things, go to the heart of, any lending fintech, right? And the interesting thing is, credit, I mean, credit as a business has been there literally like, for centuries, right? I mean, right from your Shakespeare's times, credit is something that, from your Merchant of Venice days, it's been there, right? Like, so everyone knows about it. Everyone sees the opportunity. The key, right, Shuja, and I'll give you one example of how people have been intelligently been able to maneuver and give good credit, right? So take the example of a bottom of pyramid, say a manual wage worker, right? I mean, who is working, say, in a construction firm. Now, how do you lend to him? It's a very valid question, right? Like, how do you lend to him? He doesn't have a history. You don't know if he's going to be around for a long time. He has no records, nothing. But there is a way to lend to him. How do you do that? You tie up with the entity which is actually paying his wages, right? And you lend to him, but you deduct it from the company which is paying him, and so your recovery is certain, and the worker gets what he is due post the EMI payments, right? So those are intelligent ways by which people have figured out in terms of working with payroll firms, deducting at source, right, the EMIs, etc., to really make lending a very strong business, right? And at the end of the day, you want to give credit to people who are worthy, and you want to give credit to people who are in the need of it. So so it is imperative that you drive it in these directions, right? That as an example, I thought let me mention that. I think the other point you mentioned was in terms of embedded finance. Do we, so
yeah? So I think you've spent a lot of time in one niche, BNPL, and we covered quite a few things on this. At what really is BNPL? Is it sort of repackaging credit card industry? How it takes it forward from credit card industry? What really could be the pitfalls, and what really are the three key things from an operational point of view, which really make one BNPL company different from the terms of most competitive advantage. Now talking about embedded finance, which really seems to be the new buzzword in the fintech world. Let's spend sort of some time knowing about that. So Nish, if I were to ask you, what really is embedded finance from a layman's point of view, from an entrepreneur's perspective, what would that really be? And then I'll go to the larger panel on this entire phenomenon of embedded finance? Yes.
Absolutely. And to Vijay's point, which I'll come back to on point of sale, but that's the message. Embedded finance from a consumer lens is all about ensuring that the product that they're purchasing can be financed at the point of sale, right? And if you do that, you start to change the economics and the delivery model completely. So what does it rely on? It relies on good customer experience. It relies on that delivery model. It relies on good data. So I'll give you an example. I recently wrote a piece on blockchain in insurance, and blockchain enables the ability for you to take insurance away from the hands of the consumer and put it into the hands of the asset, right? So imagine acquiring a car that is fully insured and fully financed from the dealer itself. There is no requirement to go beyond that dealer. It's a full circle, right? The consumer chooses the vehicle, probably online, and purchases it using online finance, and it's ready to go with online embedded insurance. But in order to do that delivery or achieve that delivery model, you need to make sure you're collecting the right data, you're validating that data, and you're enabling the consumer almost to have a plug and play approach to these assets. Embedded finance is all about delivering finance at the point of purchase. But it doesn't just need to look at it from a consumer lens. It can also look at it from an enterprise lens, right? Enterprises today have two supply chains. One is a physical supply chain where they manufacture the product. The other is a financial supply chain where they deliver from a POC and they deliver a purchase order all the way through to invoicing and payment at each step of their supply chain. What if that was completely embedded into it together? The finance of the product and the manufacturing of that product was exactly the same as the process of developing the product. So there's no longer the need to go to a bank, receive or negotiate and receive a letter of credit for each supplier, each part of the manufacturing process. But that finance was built in to the process of building.
Thanks for that, Nish. Demystifying embedded finance, really. And I think Nish made some great points in terms of it from a consumer point of view, also from an enterprise point of view. You want to go deep into this entire phenomenon emerging as embedded finance, as like you did, in terms of bringing out a lot of sort of meaningful points and things about BNPL. Where are we really headed in this embedded finance journey? Or can one say it's sort of another fad emerging? Is it a new concept? Will it see a lot of funding? And why? What really are the factors behind that?
Yeah, Shrija, right. And I think I'll answer that by making a fairly bold statement, right? So embedded finance is really the way by which any brand, I'm really saying this, any brand can become a fintech, any brand. And the reason I'm saying that is that I think more and more brands are realizing that while I own the customer experience, right, I also need to straddle and own the financial experience. And I'm using consciously the word financial experience because it's not just the payment experience. There are a lot of other things, that come with owning the customer, right? And the way that they are able to make it happen is through embedded finance. Now, what do I mean by that, right? Take the case of Uber. Now, Uber, we all know Uber, right? In terms of, the ride sharing, ride hailing firm to which its core business is. But Uber realized that, for their driver pool, one of the biggest needs of the driver pool was a constant need for credit, right? So Uber decided that, rather than their driver pool going to third party for seeking credit, they will make credit happen in their platform. That is embedded finance, right? So Uber owns the driver experience. Uber also owns the credit that's being given to the driver. Now, how do they make it happen? They tie up with the relevant partners. They do the right kind of credit scoring. They have all the data about these drivers. They own the drivers in some sense in terms of, an employer-employee relationship, loosely put. So they have all the data and they're able to, not let the customer go out of your platform for their financial needs, right? And if you were to just take a step back and think about it, the same thing has happened, with Ola in India, right? And And payment options is really the starting point, right? What is Ola Postpaid? It is a financial services option that you're seeing. You go to Swiggy, right? What are all the embedded pay later options that you're seeing? That is happening because they're able to make the customer proposition strong by partnering with firms which allow you to do that. And there is one clear phenomenon which has happened, which has helped companies across the world do this. That phenomenon is called banking as a service, right? Banking as a service is really how embedded finance happens. And banking as a service has been led, especially in the last 5 to 10 years, right from companies like Galileo, Marqeta, Rails Bank, Solaris Bank in the US, to upcoming companies like, right from, Zeta to Decentro to Happy to M2P, all those companies in India, all of them are making embedded finance happens. Very simply put, what is it, Shrija? It's like brands do not want to be banks, right? Nor do they want to work with banks. Banks are good at customer experience and engagement in terms of acquiring the customers, but they are not able to provide the latest digital experiences, nor do they have the latest technology stack. Banking as a service bridges the banks and the brands, right? Now, brands want to offer financial products. Banks have the licenses. Banking as a service firms, work with the APIs of the banks, provide them to these brands, and offer a complete, integrated, seamless experience to the customer. That is really, what is happening in the market, right? And that is extremely powerful. Trust me, and this is happening right from, Walmart to, you take companies across the world. Everyone wants to offer financial services. In some sense, every brand wants to be a fintech, like to my starting point. And this is exactly how it will happen. Right?
Absolutely.
And this is exactly how it will happen. Yeah.
So we are seeing this great financialization opportunity unraveling from Apple to Samsung to your mobile phones. Everybody ultimately wants to be a finance company, and perhaps embedded finance seems to be the way and the route that they're adopting. Madhu, I would like to bring you in, and from an investor's point of view, a lot of interesting arguments made by both Nish and Vijay also from an operational point of view, and both of them really sort of highlighted in terms of BNPL, the do's and don'ts, the pros and cons, and also embedded finance from an investor's hat. And to sort of Vijay's sort of very meaningful point he made, that the investor fraternity also needs to do its bit in terms of this balancing act between quality and growth. When you have fintech companies in your board meetings, what really is your conversation like with the leadership? Is it really about putting money at work, putting them on a pedestal, but really growth at quality? That is first. And second, how many of your fintech firms really are profitable? Because we have seen the story play out in e-commerce when there was huge bloodbath, a lot of VC funding happening, benign environment, and we all sort of know how that story unfolded, how many winners were there in terms of versus how many losers. Do we really see the same story unfolding in fintech, which really seems to be the new buzzword today? So question for you, Madhu, and then I would sort of bring in the lawyer here for the regulatory perspective who has been silent for some time. Yes.
I think I'll answer this really quickly. From an investor's point of view, there's just a lot happening, and we've covered it all. And embedded finance, I have to sort of underscore everything that Vijay said. It's an extraordinarily interesting time, and every company should be a fintech company. And there's just a lot of interest in BaaS, which is banking as a service, and whatnot. And I don't want to repeat some of his points, but they were just right on. Excellent points, Vijay. But the one other thing that I will say is that broadly speaking, India has 3 waves. There was the first wave where the e-commerce companies, the Snapdeals, and just very early companies. Flipkart came in, and there was a revolution. And then the next wave was the Ola and the and the Oyos of the world. I think the third wave that's coming in, which has really happened in the last 2 or 3 years, is maybe a little bit longer than that, has been this new wave of companies that have raised a lot of funding. There's just been a lot of growth, phenomenal growth. Tier 2, Tier 3 cities, quality is supremely important, and we're all sort of paying a lot of attention to the quality of customers, quality of expansion, growth. In the different sectors. There is a lot of room because of the penetration and in terms of just even the way that things have radicalized, in terms of the way business is done online, nobody can ignore the growth factor here. And with growth comes a lot of sort of craziness. And there are going to be pivots you have to take in every business.
So here's some candid revelation coming from the investor that you can't ignore the growth. With the growth will come some pivots. Yeah,
absolutely. So, and I think that it's good. And, and I think that this is, it's inevitable. But there's a lot of corrective measures, and you see some phenomenal founders that are very, very careful about the way that they are, that they're playing, balancing the growth with the monetization, balancing the growth with the product measures and whatnot. We've seen some really, really thoughtful entrepreneurs, and we're wanting to put our money.
But to my question, and a specific one, is the path on profitability defined, or is it still a long pursuit, as we saw in the case of e-commerce companies? How difficult the questioning really is with the leadership on those metrics? Is it just about growth, chasing growth, or is it also about quality, profitability, and some of those one-not-one economics metrics in the fintech space particularly?
Absolutely. And I think that's what my answer was. The growth of the entire sort of startup ecosystem in India in terms of waves has changed. While growth is central to it and where innovation is still central to it, there's just a lot of eyes and lens on now monetization, thoughtful growth, quality of growth, and in comes the monetization aspect, not just in fintech, but in every sector. But there are still some parts, of neobanking and other things we have to see. I don't have sort of clean answers to that yet, but sure. There is a lot of, like I said, a lot of thoughtful development, a lot of thoughtful growth, with a lot of sort of key, lens and eyes on monetization, because the optics has to be good now. The funding environment is crazy. There's a lot of tightening in the market at the moment, so. I think we'll see a lot of balancing act. There is going to be a lot of balancing act to come. Yeah.
Okay, Nish, I think I would like to sort of bring you in. Madhu said the optics have to be good because it's too much growth, too much funding at disposal, too much of capital at stake here. So it's really about the optics here, really. I mean, like the optics, you have to appear good. And when you have to appear good, some of the missteps can happen. And the investors also saying that some corrective measures perhaps are also being taken by the entrepreneurs. So maintaining this balance between growth and good growth. I mean, how does one really sort of maintain that? I mean, it's really the question because there's so much craziness in capital and so much really happening out there.
Sure. Yeah. And actually, you have to thank the VC community because they allow people like me, entrepreneurs, to try and fail. And the key is we want to fail quick so we can pivot and find the optimal business model. And there's a saying in technology, it takes years to create an overnight success. And those years need to be spent developing the right business model. But, we're in a period of innovation, right? And that innovation, call it pandemic fueled, call it the rise of globalization and then the change of globalization into internationalization, call it the emergence of that middle and bottom of the pyramid class into the formal economy. All of that is fueling the need for services in the pocket, as I put it, right? And that digitalization of every type of service that we have. Now, in order to find the profitability of those services, you need time and you need to experiment. And at any point in time, you should think that you probably could cut growth to create profit. But at what aim? Is that aim to build a small business? Or is that aim to ultimately build a big business and land grab? And I go back to my earlier comments. I do hope that we will never have a position of a monopoly on any of these providers, but a competitive working environment. Maybe you'll have strong niches for each of these companies that are providing these services, each of these fintechs. But the point goes back, which is you can balance growth with profitability, but it's too early to do that. You need to continue to experiment to find the optimal business model.
Shreya, I would like to get you in here. It's from a regulatory landscape, and I think it's very important for entrepreneurs to also understand that what really are the regulatory impediments that they can also sort of face in the fintech. That is number one. And second, some of the boons really which regulate from a regulatory point of view that they can leverage upon in the entrepreneurial journey from a fintech perspective. So really sort of help us understand some of that. And I would like to sort of really give the floor to you now, because you've heard all your sort of fellow participants talk about the niches in the fintech space. It's time to hear from you from a regulatory perspective. Sort of where do we really stand? And before sort of I hand over the floor to you, I should just say that when I was in London, the entire UPI ecosystem has been the cynosure-ized all across the world, that people sort of really revere as to what we have done in the UPI stack system. And that's really been revolutionary. So yes, Shreya, what do you really think are some of the regulatory landscape challenges and opportunities which entrepreneurs should be aware of? Yeah.
Thanks, Shrija, and thanks everyone for those thoughts and insights. So, as I think one of you mentioned, that any company can really become a fintech, and all fintechs, or a large majority of fintechs as we know today, are practically operating on the edge of regulation. There is, wherein a lot of companies are tying up with regulated entities. The digital partners are not essentially directly regulated as of today. So some of the issues that the industry is facing because of this, and which the RBI is cognizant of, are issues relating to data security, financial fraud. These are two large concerns that exist as of today. And regulatory bodies are looking to solve it. For instance, they've brought in a completely new framework for payment aggregation. There are some baseline technology specifications which have to be complied with by all partners in the payment space. And of course, there is also a requirement not to store card on file data. So along with that, the reason that has come in is essentially because of all the industry boom, of course, has been a great thing for our economy, and for bringing digital finance and digital payments to a huge untapped set of consumers. But it has also brought with it concerns of financial fraud. So to sort of curb that, the RBI is working towards these restrictions, wherein card on file data will only be stored by card networks, and something like the UPI, they will be creating the concept of tokenization, wherein the token which will represent the card will be passed on between merchants and payment aggregators, and not the card information itself. So similar to the UPI architecture, wherein the bank information, bank account details are not exactly passed on to the merchants, but an ID is passed on, that will ensure a certain degree of financial security in the market. And that will also ensure, there is apprehension in the market about its adoption, but I think if it is popularized as much as the UPI, and if it, is able to show that sort of seamlessness, every user will have their card details protected, and also they will not face so many issues as far as operationality is concerned. So that is one aspect that the RBI is looking at it. Data protection is, of course, another. And one issue that a lot of fintechs and companies face is data localization. That is something which the RBI has already put into the payment space, and also to a certain degree in the banking and insurance sectors. So that is an impediment which a lot of tech companies are dealing with, especially those providing services to all these regulated entities. And a set of a data set for access in India is required to be maintained, a serving copy, for instance. So,
Okay.
yeah, these are some of the regulatory issues that exist.
Thanks for that, Shreya. We can just go on and on. I think in today's dispatch, we sort of dwell down deep into BNPL and embedded finance. We definitely need to do a second season of this. And because we have not just even touched upon neobanking and the frenemy relationship they have with traditional banks, which I think requires a 45-minute deep dive into that. But just to do a quick wrap up, and we will do definitely a follow-up on this one. But if each one of you were to give me like a closing on what really sort of really still remains the unexplored niche in fintech, or perhaps like a reverse pitch, if you were to pitch, most of the entrepreneurs come and ask you for money. But if you were to give one idea and the unexplored pitch in terms of fintech, what would that really be? Because all of you are so sort of used to listening about ideas from the entrepreneurs. I'm putting three of you on a hot seat here. The reverse pitch. Give me one idea in the fintech space which you think has been unexplored or perhaps not tapped to its optimal opportunity. I'll begin with you, Vijay, Nish, and then Madhu. Yes.
Sure, Shrija. So, interesting question. And if I were to say, I think the one thing which I would really like, and it's what I'm suggesting as an idea, is that one platform, right? One platform where I, as a customer, can today, do my banking, do my investments, do my insurances, track whatever, loans I have taken, look at my credit scores, apply for loans. I think we are making incremental progress towards there, but we still don't have all the frameworks in place, all the partnerships in place, etc. But that is something to me would be utopian, right? To be able to kind of have like complete financial freedom, right? Like I just open that one app and I see everything. I don't need to see anything else. To me, like that will be the single biggest idea.
Nish, Vijay has given utopian idea. That is what he feels that should really happen. Perhaps you could give me a more realistic one. What would that really be? Yes.
Well, Vijay's one is not unrealistic. I mean, I think of China, right, with the super app, and so it's a very good model. But I'd like to think of India as being a bit more innovative rather than copycat. And I think that's where the opportunity for India lies, which is moving away from its service IT culture to its product innovation culture. And I think of technologies like blockchain, which can democratize the way we deliver finance and consumer products. To the point that was made on regulation, blockchain is a technology that enables you to share credentials without sharing transparency. Right. And blockchain can start to change the way that we look at financial services and we deliver those financial services. Your point to what's the super business, fintech business of the future, I have to say, I hope that I'm involved with that with one of my investments in Agam, which is partnering with banks to make them more digital.
Okay. What about you, Madhu? Yes.
I think it's, India has a massive opportunity in terms of data, and how do you use data to power many of fintech solutions. And, my idea is, I think Vijay has kind of taken a little bit of it, and it's not it's not too far from reality. And to be able to democratize all of this in one platform, and to be able to use data in a way for the the unbanked segment. That's, I think, something that I would really love. It's an impact. I don't represent, my own, it's not my investing hat, but this is sort of my impact hat. And I think that's where a lot of value creation resides. And the value creation, if that really sort of goes down to the bottom of the chain, then I think you will see you will see sort of a lot of things unlocked in delightful ways. And so, that's what I'm really hoping for.
Okay. Shreya, now if you were to give one advice to your fellow participants, investors or entrepreneurs, quick one, what would that really be? And then we just wrap this up. Yes.
Sure. So like I mentioned, the RBI is also working on a digital lending framework. So a lot of the companies which are operating on the edge of regulation as of today will likely come under some sort of regulatory ambit, and some of the businesses may require restructuring to a certain degree, especially those involved in digital lending, BNPL. And what works today may not work tomorrow. So I would definitely advise my fellow participants to closely monitor the
Excellent
emerging
point. This is a
landscape.
great point.
Yeah.
Yes. Restructuring
And
has to be on the anvil. Yeah. Yes.
yeah,
A lot of
yeah,
BNPL companies in particular. Yes.
absolutely. And the working group's report, which has come out, identifies some of the recommendations which we can see in these regulations. For instance, a lot of fintechs participate in FLDGs, which have essentially been prohibited as part of one of the recommendations which has been proposed. So in the event that is accepted, we will see a lot of fintechs requiring restructuring. Even a certain percentage of FLDG is something which is not going to be accepted if the recommendation comes to light.
So what is relevant now might not be relevant some years from now, and one really has to keep a viewpoint on this. Restructuring on the anvil for BNPL companies. Quick rapid fire. Each one of you have to name one fintech unicorn which you like, and one fintech unicorn which you think is overhyped one. What would that be? It could be in India or globally. And I'll start with you, Nish. One fintech unicorn which you think you admire, and one fintech unicorn which you think is overhyped. What would that be?
Oh, that's a very tough question. So given I'm in London, I should take an international perspective. So I have to say, I do admire Klarna. I think Klarna has been a real innovator. In particular, remember that they own a banking license. So to the regulation point, they're trying to understand how BNPL can innovate in a regulated environment. I find it difficult to think of one that is overhyped, but maybe Get Here, which is a grocery delivery app. It's just raised money at a substantial valuation. This is about land grab. As long as someone like our VCs are funding that, great. When they stop, the roundabout will vote. When the tide goes out, those who are swimming naked will be shown to be swimming naked.
Yeah, we are already sort of seeing the signs of it already, those who are swimming naked. What about you, Vijay? An overhyped one and one whom you admire?
One whom I admire, Shrija, is Razorpay for the kind of transformation that they have brought to the payments landscape in terms of the kind of convenience and cost structures and partnerships, and just a completely disruptive way of how they've changed payments. One, I would say, overhyped is maybe one way to look at it, or probably model yet to be proven in many ways. Maybe I'll term it that way. Right? For me, is cred. Right? To me, there is a lot of promise. There is a lot of hype built on the promise, but I think the promise is to be delivered, right? And so maybe it gets delivered, right? But I think I would hope that happens. But to me, it's an unproven entity in some aspects, right? In some aspects, yes, there is traction, there's movement, etc. But a lot of the hype riding on the valuation riding on is on the promise, and to me, those are untested waters, given the narrow segment of the customers that they are chasing. Yeah.
I did study in Australia, so I'm just going to do a little bit of a plug for them. They've built something phenomenal. They've built something really quick, and I think that the ones there are many that are overhyped. I think neobanking as a sector, I'm still sort of watching very closely. I don't want to put an entire category under the bus here, but it's worthy to note that there's I'm watching the space carefully, and some very, very exciting and some fantastic entrepreneurs. But neobanking as an entire space, I wonder sometimes, yeah.
Shreya, because
I would have to actually refrain from answering this one because I may have some conflict of interest there. But definitely a lot of companies doing great work out there, and I think one point which Vijay had mentioned was to do with a one-stop shop. So I do see a lot of our, not just clients, but other companies also trying to move towards that operational use case in the future. I mean, they're all gearing up.
Okay. Thank you for this lovely discussion. We had such a great time talking about so many things, and we should definitely congregate once more to talk about neobanking in detail. That's really emerging as the niche in fintech and a space to watch out for.